Okay, so let me show you my today's gold trade recap. Now, the first thing I do is I try to determine my draw liquidity, and I'm mainly using the higher time frame charts like weekly, daily, and 4-hour charts. Now, also I'm using two concepts, which is external range liquidity and internal range liquidity dynamics, and also I'm using the institutional order flow in terms of changing states, order blocks, and fair value gaps being created. Basically, which bid areas are being respected and which bid areas are being disrespected. Now here you can see that we took the external range low, external range liquidity low here, and after we took that we have a huge reaction. Meaning here on the daily chart we have the daily change in state higher. We also have a displacement higher right here in the forms of the daily BC, and on the opposite side of the curve we are um, closing through the um, this CB, and by doing that we basically inversing that and becomes our IFEG, and this tells us that bearish PDRAs are not getting respected. So it tells us a lot in the about the current order flow. And for me, looking at all of these, I can say that my draw can be previous day high, um, also how we closed through previous daily candle, closing higher. So for me, I want to target the previous day high, which would be Monday high. So this is mostly done on this higher time frame chart. Now for me to engage in the um, wait, for me to engage in a price, I would need to either 4-hour key level or 1-hour key level, internal or external range liquidity. So here we can see we have this 4-hour BC tapped, and after that I would like to target the previous day high. Now if I'm using the 4-hour key level, that means I'm gonna trade this 4-hour swing formation, and on our lower chart that would be the market maker model, basically like this. So after that we can go to lower time frame chart, 15-minute chart. Now I'm not using the exact time frame alignment like 4-hour to 15. I'm using for me as what makes sense, how I can enter. Now here we can see that we have yeah, also for reversal from the key level I would need to have an SMT, and we have it here with the silver. So we have our key level tapped, then we have this 15 minutes change in the state higher. After that we have all of these displacement in the forms of 15-minute BCs higher. Oops, we have lots of them here, and for us it's great because that's the exact conditions in what we want to trade. Like that's exactly what I see happen in our session, our New York session. So we're seeing this, we have a draw. Also we can see these London highs, Asian highs, and previous day high. That makes perfect draw, the smooth edges for us. And this reversal is happening at 8 a.m. and I am trading after 9 a.m. So basically I cannot trade this change in state or reversal. And if I cannot do this, so the other option is to only trade continuations. And for that I'm using the order block continuation. And I did not execute on this 15-minute chart because it looks like it's not it's more of a discretionary decision in what kind of time frame to use for your executions. But I use the 5-minute chart because, as you can see here, after 9 a.m., after 9:30, we picked up the volume here. The candles actually look bigger than like in this area. So I can use the 5-minute candles. That will be enough for me to enter the trade. And so what I did, I used these two down close candles that I tapped into the 5 minute ERL. That for me, after that it becomes the valid order block, and I just enter the on the retest of this candle, stop loss here, and TP on the previous day high, which actually was like this. That was only 1.4 because I did not want it to hold past, and I had to have my stop loss underneath this, under the fully invalidation point, not just like here or like here, because I wanted to give my trader breathing room. So that's exactly how I enter. Can show you my executions right here. Oh, and also one more thing, the trade happened after the 10 a.m. So this candle is 10:20 a.m. So that means that this 6 a.m. 4 hour candle closed, and I was trading this 10 a.m. candle. So we can see this 6 a.m. candle and this 10 a.m. candle. Basically, 6 a.m. candle is a reversal candle, and then 10 a.m. is a continuation candle. So this gives us lots of confirmation um, when it comes to trading the continuation, which is always way easier than trading these reversals. By the time price is already here, the chances of it going like higher and taking these Asian highs in previous day high way higher than just like fully reversing and taking these lows out. So we already all the way high in terms of this market maker model, which gives a, I guess, silver bullet area. So the chances of price going higher are really great for us. So that's about it. Thank you.